We have been talking about the US Fed, its actions and hawkishness for some time, but after the FOMC, the attention shifts to Rupee as we break the psychological 80 level. Good morning and welcome to Almus Market Mornings. This is your host Swaraj and I have JK with me who will be covering the market updates. Now, the currency space has rather been very interesting. Yesterday, Rupee having a phenomenal move, opening with a gap and carrying the rally. Well, Rupee wasn't alone. Japanese yen had an interesting day as well, with the Bank of Japan intervening in the market for the first time since 1998 to prop up the yen. We saw a good move of close to five big figures in a very short span of time. Good morning, JK. A lot of volatility since the hawkish statement by Powell and a very busy central banker calendar. What updates do you have for us?
Good morning, Swaraj, and to all our listeners. Yes, Rupee for a change stole the show in our markets. The currency, which was almost sleeping for several weeks, woke up after the Fed decision previous night, and also escalation in the geopolitical scenario. Rupee breaking 80-20 was actually a signal that it was time to catch up with the freer markets, and the central bank was taking a pause. The resulting move was a staggering 1 rupee up move in the USD from the previous day's close, as the stop losses kicked in for unhedged importers and traders had a field day. The fact that price hardly sustained any short retracement is a testimony to the way market was positioned, with the market now convinced that Rupee is at last adjusting lower to fall in line with the other currencies. Where from here, cues will be taken from central bank, where the short-term cap will be. Unlikely that they adopt a hands-off approach for long, and they will reappear as the market gets too one-sided. As we are now in an uncharted territory, projections will be subjective, but going by the measured objective, I feel somewhere at 81.50 will be a halting point for the USD INR. In fact, we had a taste of intervention in the international market from Japan. And if more central banks get into action and succeed in putting near-term floor for their currencies, that will be a signal for reassessing whether Rupee has moved lower enough. However, not to forget that besides the global dollar strength, we have our own challenges of big external deficits not funded enough from the flows. Until that changes, a sustainable turning point for the Rupee is still some distance away. Yes, yen soared across the board on Thursday after monetary authorities intervened, and it was a good effect of intervention because the timing was good, as the market had moved into a new high post Bank BOJ Chief Kuroda's press conference, and once the intervention was confirmed, we saw a move almost 4% in the currency. Other currencies also took some breather from the Japanese yen move, but they've all moved back lower, while the dollar yen has stayed somewhat lower in the market. In fact, surprisingly, even gold got some support after the dollar yen moved, lower. On the yield side, they have been on a tear, particularly the two-year yields in the US, that has made a new high for the last 8 trading days, moving from 3.50 to 4.17. But the longer end have also moved yesterday. Reportedly, some of the central banks have been selling treasuries to raise dollars, which they would be using in intervention, like Bank of Japan yesterday. This would mean that yields will go further up, in spite of Fed indicating a cap at 4.6. I won't be surprised if yields overshoot, and this is something that the Fed or US authorities would not like, as it may raise systemic issues with possible fund failures because of the increased cost of financing, and also the increased cost of financing the trillions of debt that the US government carries. So I feel not a time too far away for US authorities to talk the dollar down, so that such a way of raising dollars through sale of treasuries is avoided. Stock support fell for a third day in succession, not surprising, but importantly, Europe caught up after holding up for 2 days. The late reaction to Russia's latest threats, and was down 1.79% lower. We had as many as 8 central banks raising policy rates yesterday, and Japan was the lone exception, holding on to the rates steady, but most currencies are still languishing at the central lows, reconfirming my stance that monetary policies are not helping in containing currency lower. One way or the other, I feel we are at a big inflection point for the currencies, even as they are making new cycle lows. Yes, we will have finally some word from Fed speakers as the blackout period is over. We'll have Fed Chair Powell give a remark at an event at 14 GMT, and then there will be others like Brainard and Bowman, who is generally a dovish, will have their conversations as well. I'm sure they will touch upon the policy going forward. Yes, there is a surfeit of action and volatility everywhere, and definitely a lot of caution and strong risk management is needed by corporates and as well as traders. Thank you. Have a great day.
Thank you, JK. And guys, as JK mentioned, a lot of volatility in the global markets. Of course, Rupee stole the show with a 1 rupee move, and we had intervention in yen, and even the yields, 2-year yields in the US are at new highs, new cycle highs. That's it for today, folks. Yesterday, of course, serves as a reminder that currencies can be volatile as well. So keep managing your risk. Thank you so much for listening. Have a very good weekend, and tune in for Monday to get your latest dose of latest financial updates. Thank you.